Hello, my name's Alice, and I'm here to talk to you today about our fee protection service, which we're offering to all our clients. So, our fee protection service is designed to help protect you and your business from unexpected accountancy fees should you be subject to a HMRC investigation. So, I'm going to start by clearing up a few common misconceptions about HMRC investigations. The first one being that if I haven't done anything wrong, HMRC won't investigate me. Yes, HMRC might open investigations based on information from third parties or because businesses operate within high-risk industries such as cash businesses. However, they also conduct random tax investigations. So you could find yourself or your business subject to one of these random checks, even if all your tax affairs are compliant and up to date. HMRC can also open investigations based on things that are completely explainable, such as inconsistencies in tax returns, late filing of tax returns, unusual transactions. So, for example, if you're a sole trader whose turnover goes up and down each year because you're away for certain months of the year, HMRC could see this as slightly suspicious and they might want to know a bit more for the reasons in those fluctuations. Another common misconception people have is that if HMRC open an investigation into my affairs, then they have a total right to see all my books, records, and personal information. So HMRC can actually conduct different types of investigations. So random investigations are exactly what they're called. They involve HMRC requesting supporting information for corporation tax returns or self-assessment tax returns, just to check whether the returns are complete and compliant. There's also what's called aspect inquiries, and these are to check a specific area of the return. So, for example, if someone had failed to declare a student loan on their return, HMRC might wish to investigate this. There's also what's called full inquiries, which is what people tend to think about when they think about HMRC investigation. So this is if they have a reason to suspect tax evasion and they would come and look at all your records. They'd have a right to, look at your computers, speak to the directors, interview them, and make that decision on whether tax evasion had occurred. A couple of inquiries that are also relevant for our clients would be VAT inspections and PAYE inspections. So these are just to sort of check that the returns are complete and that they're complying with various VAT and PAYE laws. So you might be thinking, if I am subject to a HMRC investigation, what exactly does that involve? So if they decide to open an investigation into your individual or company taxes, they're going to formally notify you by letter. So this letter will include details about the scope of the investigation, any information that they require, and also importantly, a deadline for providing this information. And if a HMRC investigator wishes to visit your business address, then they would also state this in the letter. Once you've sent that information back to HMRC, they're going to assess your tax position. So they might request some additional information along the way, and they'll give you deadlines for providing that additional information. So it's very important that you meet those deadlines so that the investigation can continue at a normal pace. So this communication will then continue between yourself and HMRC until they're happy they have all the details they need to form a conclusion. So HMRC will then assess your tax liabilities, refunds, and then propose any relevant adjustments if they feel that that's appropriate. HMRC will also calculate any penalties or interest they believe is due. Once HMRC have made their decision, they'll write back to you, summarise their findings and outline any penalty notices. So if the taxpayer accepts these findings and agrees to HMRC's proposed settlement, then the investigation is closed at that point. Taxpayers do have a right to appeal a decision made by HMRC via the appropriate channels, but this can be a complex process. So you're probably thinking, this is the last thing I need when I'm trying to run my business. So an HMRC investigation can sound like a daunting prospect, particularly if your tax affairs are compliant and then you find yourself subject to a random investigation. It can be quite frustrating. Providing HMRC with the relevant information in a timely fashion, as well as keeping on top of all this communication, can be a time-consuming task. As your accountant, we can support you every step of the way. So from dealing with HMRC letters, gathering the relevant supporting documentation and providing clarity and assurance along the way, we can make the entire process much smoother for you. If we're appointed as your tax agents, which we are for most of our clients, then we can liaise directly with HMRC on your behalf throughout the process, unless HMRC specifically wish to speak to you, in which case we'd obviously let you know. If HMRC wish to conduct an on-site investigation, which can be common, particularly with VAT inspections, then we may even be able to host this at our office if that's appropriate. This means that your staff can continue working as normal without that disruption in place. Even better, if you've got the TCSE fee protection in place, then you won't have to pay a penny for our time for dealing with the investigation, providing that HMRC conclude there's no errors. So this means that for our hardworking compliant clients, they don't need to worry about unexpected fees that are outside their budget. So the insurance covers a variety of HMRC investigations, and I'm going to show a few of these on the screen just now for your reference. So corporation tax, self-assessment, VAT, including VAT inspections and visits, income tax self-assessments, that's your self-assessment tax returns, PAYE, any CIS investigations, national insurance inspections, stamp duty, IR35, employer compliance visits, capital gains tax, national minimum wage, gift aid, P11Ds, inheritance tax, and even child tax credits.